Accounting Standard 11, bolo mere ko. What does Accounting Standard 11 talks about? Effects of change in foreign exchange rates, correct? Now, AS 11 was very easy. You have to first ask, whenever you have a transaction, you have to first ask, for this transaction, do you have a forward contract booked or you do not have a forward contract? Now guys, what is a forward contract? A contract where in the future you have a receivable or a payable for the future. You decide the rate today. When the rate is decided today only for the future transaction, usko bolte beta forward contract. If the forward contract is not booked, then it is very simple. This answer will have only 3 steps. First step, on the date of transaction, that is when the transaction happens, that is, you know, you have purchased the goods or you have sold the goods, on that date you should record the transaction at spot rate. Matlab, at that time whatever was the rate, you should book it, correct? Okay. Then second, if there is a year end in middle before the settlement of transaction, if there is a year end in the middle, then at the year end you should record this at closing rate. You should record it at the closing rate. So obviously there will be a difference between spot rate and the closing rate. Then the difference will always be charged to P&L. The difference will always be charged to P&L. Clear till here? Okay. On the settlement date, you will again settle the transaction at the spot rate. The spot rate on the settlement date. Again there will be a difference. That difference will go to P&L. That difference will also go to P&L. Clear till here? Now in this case you have to look if this transaction is happening for a loan purpose. Matlab you have taken a long-term loan from the foreign in form of a foreign currency, then you have to check whether this loan was taken for depreciable asset or others. If it was taken for depreciable asset, then the difference that happens can either be added or subtracted to the cost of asset. Matlab if you are having a loss, add it to the cost of asset, or if you are having a profit, reduce the cost of asset. That option is available, or if you don't want to do it, you can charge it to P&L. If this loan was taken for non-depreciable asset, matlab for other reasons, जैसे for your working capital requirement, for any other reason, then again you have an option. Either you can save it in an account called foreign currency monetary item transaction difference account and amortize over the life of the loan, or you can charge it to P&L. Clear till here? So the rule is always very simple. Whenever it is just a transaction, that is purchase of goods, sale of goods, anything, it's just one single transaction, then you should check whether there is forward contract or not a forward contract. If it is not a forward contract, guys, the answer is very easy. Only 3 steps. On the date of transaction, spot rate. Year end pay, closing rate. On the settlement date, again the spot rate of the settlement date. Difference will always go to P&L. But if it is a loan, then again you should check if the loan is for long term or short term. Short term means the same steps. The same steps will remain. But if it is a long term loan, then again you should check if it is for depreciable asset or others. If it is depreciable asset, then add to the cost of asset or charge it to P&L. It is up to the enterprise. And if it is non-depreciable, if it is for others, then you can save it in this. Clear till here? Okay. Now, if there was a forward contract booked, then again you should check if this was done for speculation purpose or non-speculation purpose. Speculation matlab gambling. You're predicting what will happen in the future, and based on that you're placing your bet today. Okay, if it is a speculation. If it is non-speculation, matlab you actually have a receivable or you actually have a payable. Okay, if it is non-speculation, tell me what is the formula? Guys, SPF. Remember SPF, if you have to pay, then the spot rate minus forward rate. And if you have to receive, then it will be forward rate minus spot rate. Pay matlab it is your creditor. If it is a creditor, then the formula will be spot minus forward. And if it is a debtor, then it will be forward minus spot. SPF, you should remember. Okay. And if there is a speculation, then on the date of transaction, no entry. On the settlement date, what you will do? Sale rate minus contract rate or the forward rate, that will give you your profit or loss. Am I clear till here? Okay, this is just one transaction. If you have a foreign business, then that business will record all the transactions in their currency. And can I say that is also my business only? That is also my business only. So their trial balance should be incorporated in our trial balance. But guys, that is foreign currency. Here it is our currency. So it will not mismatch. So we have to convert. The trial balance of foreign currency should be converted into rupees, our currency. Correct? So now for conversion, you will check all P&L items and all balance sheet items. All P&L items should always be converted at average rate. Why average? Because P&L items, incomes and expenses happens throughout the year. So average rate, opening rate plus closing rate divided by 2. For balance sheet, you should check if it is a monetary item or non-monetary item. Again, in monetary item, if you have a forward contract, then record it at forward rate. If like you have a debtor monetary item, for that you have a forward contract, so record the debtor at the forward rate. If there is no forward contract, then you will record it at closing rate. And if it is a non-monetary item, then what you will do? Record it at historic rate. Historic rate is what? The date on which the transaction had actually happened. Clear till here? Okay. This is a quick look of how it will appear. Okay. This was a quick revision of AS 11.